Okay, guys, how are you doing? JJ here from Trading the Charts, Trading the Charts Pro. I'm actually in the ES and been monitoring this for the last 10 minutes and actually see that we had a breakout um, right around here. Then market run up, pull back sideways a little bit, run up, pull back, then it made this two-legged move here, pull back down to this support, then we have a run up. So right now we have this double top right here, and on the larger time frame on the 5 minute chart I'm also seeing the same double top. On the 60 minute chart I'm seeing price run up to the 200-day moving average, and it is basically at least looking like it's want to take a pause. So this may potentially be a good place to take a short. Let's wait for the confirmation, see what happens. Hmm. And to do that setting work right there, so I missed the trade. This may potentially bounce right here at this moving average. Let's see if we get a breakdown. This is the thing about trading the live markets as well. When you're in the market, it's not about clicking every candlestick you see and just going long or going short because you see a specific candlestick change color or you see a bearish engulfing candle, something of that sort. A lot of that stuff doesn't really mean too much. As far as the system that I'm using, I'm looking for, the trends. When is the market trending? For example, technically what's going on right now is this is a sideways consolidation happening right now. Or yeah, sideways channel. What you want to get good at spotting is you want to get good at spotting when the trend is about to change, or when the start of the change of the trend has begun, and then you take a shot and ride the trend up. Okay, if you didn't get in right here, you didn't get in right here, you know an uptrend will pull back and make a high low, and then you catch the second leg up. All right, that's what I am teaching. This is what I teach my student how to do in the market every day. So there potentially can be another trend right here. There can be another trend right there. Or we can have a new uptrend break off from here and go this way. You just have to be able to understand the way the market moves and know how to take advantage of the direction that the market is the market is basically moving in. But you have to be very objective in your view of the market and try not to be biased, because in my opinion, when you're too biased, to one side, whether it's a bullish bias or a bearish bias, you can actually get blindsided because you're only focusing on the things that make you feel bullish. And because you're so consumed with the things that make you feel bullish, your brain is not necessarily paying attention to the visible things or the visible flags that are flashing to show you that, hey, what you're thinking is not necessarily what is happening. It's actually the inverse. So it's very critical for you to pay attention to the chart and don't overthink what's actually happening in the chart. Just pay attention, in my opinion. Still waiting. Now, what I'm thinking is about to happen is we have this, and we have this move here. Hoping we get a high hit and then we get this breakdown. That's what I'm looking for. Also, this is a very tight place to try to catch a trade because you also got support right here. This is not a very good place to take a trade. Whenever you see price oscillating this close over the moving average, it technically means that price is not going anywhere for that period of time. And that's why it's really not good to um, trade in a consolidation, because that's where you lose money unless you're getting it precise and you're buying right here and then selling at the peak. Buy right here, sell at the peak. Buy right here, sell at the peak. But the smaller the channel is the harder it is to get these moves or these small buy execution area correctly. when you have a wider channel, for example, this is resistance, and then you have support down here, it's a lot easier to play this kind of consolidation because you have a wider target. So you buy right here, then you sell right here. You buy right here, you sell right here. You buy right here, and then you sell right here. It's a lot easier to play wider channels versus small channels. When you're in small channels, by the time you get in, price come back down. By the time you get in, price come back down. Price you get in, price come back down. So the smaller the channel is, the more riskier it is to become profitable trading those very small channels. That's why a lot of traders tend to really like to only be in the market whenever the market is trending.